Konti lang yung file niya.
Nalalait ka na naman.
Nalilig na. Parang,
Siyempre pa din mo.
kulay.
Good afternoon, everyone, and welcome to Megawide Construction Corporation's analyst briefing for the operating and financial results for the first 6 months of 2023. I am John Cosico, Megawide Chief IR Officer, and I will be this afternoon's host. Before we begin, allow us to share our standard disclaimer slide for all the participants. Please take a moment to read. This afternoon, we are joined by our management team headed by our President and CEO, Mr. Edgar Saavedra. Our finance team headed by Group CFO, Mr. Ramon Diaz. And our debonair AVP for IR, Mr. Rolly Bondoy. We also have with us this afternoon our Chief Executive Advisor for PTEX, the country's first world-class land port, Mr. Mohit Malhi. And of course, our latest addition to the growing Megawide family, PH1 World Developers team, led by its president, Ms. Gigi Alcantara. This afternoon's presentation will be broken down into 5 parts. The financial highlights, to be followed by a quick discussion on each of the continuing business segment, construction and land port. We will also provide the investment rationale for our PH1 World Developers acquisition before we turn over the floor to PH1 team. And finally, we will close the session with Q&A session. Let us now begin this afternoon's proceedings with the first half 2023 financial highlights. Rolly, take it away.
Yep, thank you, Ms. John, for that very kind introduction. So to start off, Megawide generated consolidated revenues of 11.1 billion in the first 6 months of 2023, 52% higher than the previous year. Construction basically contributed the bulk at 10.9 billion, following the deconsolidation of airport operations. Landport operations accounted for the remaining 191 million. Consolidated costs totaled 9.8 billion, resulting in a gross profit of 1.4 billion for the period. Operating expenses amounted to 712 million, leading to an operating profit of 666 million. A net other expense of 286 million was incurred during the period, as finance income of 605 million and other income of 156 million were offset by finance costs amounting to 1.05 billion. Tax expense amounted to 18 million, delivering a net income of 363 million for the period. In terms of margins, consolidated gross margin for the first half was 12%, with 12% attributed to construction and landport ending with 11%. Construction, however, showed a marked improvement to 14% in 2Q 2023 from 9% the previous quarter due to the delayed booking of a variation order. Consolidated EBITDA margin was recorded 14%, 13% coming from construction and landport generating 62%. Consolidated margin, on the other hand, tapered off to 3% from 5% last year, as the landport segment continued to be in the red. Construction, on the other hand, registered a 4% net margin but significantly improved in 2Q 2023 at 6% from 1% in 1Q 2023. Moving on to some balance sheet highlights, consolidated cash as at end June 2023 was 10.2 billion, lower from end December 2022, as cash was utilized for the payment of dividends, debt servicing, and retirement of Series 2 preferred shares, among others. In terms of liabilities, short and long-term debt were almost unchanged from end December 2022, as portion of the airport transaction was used to delever debt. In terms of leverage, consolidated DA ratio stood at 1.7 times, well within the covenant of 2.33 times with lenders, while net debt to equity was at 0.8%. Moving on to the performances for our continuing business segments. For the EPC and Precast and Construction Solution, or PCA segment, revenues amounted to 10.97 billion during the period, 55% higher than the same period last year. Of this amount, EPC provided 93% and PCS contributed the balance of 7%. Of the total PCS revenue, external sales comprised 36%, steady from the previous year as the unit started to aggressively tap external demand. Precast products and ready-mix concrete accounted for more than 60% of external sales. It is worth noting that 2Q23 revenues amounted to 6.7 billion, 57% more than 1Q 2023, as a result of delayed booking revenue related to the MCRP project. The company's order book remained healthy at 50 billion as at end June 2023, equivalent to 3 to 4 years of pre-COVID revenues, covering 2022 ongoing projects. In terms of project mix, residential projects cornered 30%, commercial and industrial contributing 47%, and infrastructure accounting for a 23% share. In terms of completion, 52% of the order book are in the first trimester, providing significant revenue backlog, 44% in the 20 to 80% accomplishment level, and the remaining 4% in the completion stage of 80 to 100%. Moving on to our land port, for the first 6 months of the year, revenues totaled 191 million, net of PFRS adjustment of 35 million. The commercial segment accounted for 50% of the total at 96 million, office at 30% or 57 million, and the other revenues, representing the net portion of the annual grantor payment, accounted for 38 million or 20%. Average daily foot traffic as of June breached the 100,000 level anew after falling below this threshold in the first few months of the year. 14 new routes across the country were opened during the period, 3 of them starting in 2Q 2023. Together with the improvement in foot traffic is the increase in average passenger spend to 35.4 pesos per passenger, the highest ever level to date, from 28.5 per passenger at the start of the year. This was attributed to strong leasing performance and robust sales from new tenants like Dunkin' Donuts, Bonchon Chicken, Tim Hortons, Highlands Coffee, Watsons, and many more. Commercial leasing occupancy continued to improve to 82% as of June, with the commercial team looking forward to open other known brands such as Robinson Supermarket, KFC, Sbarro, Rico's Lechon, Hapchan, and Puma for the rest of the year. F&B outlets comprise 55% of the tenants, with retail and services accounting for 30% and 15% respectively. Despite the challenges in the office segment, tower occupancy improved to 60% as of June, as the PTEX team ingeniously explores ways to fill in the vacant spaces. These attracted some of the largest global logistics companies like Lalamove, UPS, and other local BPO players such as SP Madrid and Dynamic Outsourcing Solutions. Non-POGO tenants comprised 33% of total occupants. At this point, we would like to give you some exciting company updates. Last July 12, 2023, Megawide, the buyer, and Citicorp Holdings Investment Inc. the seller signed definitive agreements for the acquisition of 100% of PH1 World Developers, the target company, for a total consideration of 5.2 billion. The transaction financially closed last July 27, 2023. With the transaction, PH1 World now becomes a 100% subsidiary of Megawide from previously an affiliate under the CHII umbrella. This provides Megawide a third growth platform to complement its existing EPC and infrastructure segments. For Megawide, the move is a natural progression for construction companies in a means of forward integration. The transaction is also aligned with Megawide's thrust of being an infrastructure innovator and a progressive developer. In addition, it offers a risk management mechanism and provides a platform for long-term, sustainable, and stable growth for the company. Allow us to discuss each in more detail. Megawide's experience as a construction company and operating the largest and most advanced precast and construction solutions complex in the country serve as foundation to progress into higher value-added segments like property development. This forward integration, we believe, will enhance consolidated margins to mid-teens when construction's existing net margin is combined with PH1's net margin upon steady state. The move is also aligned with Megawide's vision of a first world Philippines and pursuit of progressive developments. For one, PH1's target market is the end user, belonging to the affordable to mid-income brackets, such as early nesters, OFWs, and young professionals. PH1's projects are also strategically located within public transport infrastructure, such as the LRT2 and the MRT3, the ongoing MRT7, and the future MRT4 lines. Megawide also understands the risk management component of the transaction in terms of reducing counterparty risks, such as contractual disputes and receivable issues. Due to financing schemes available to property developers, cash infusion from Megawide will also be managed. Internally, there are also synergies which are expected to result to optimized executive time, better project management, and improved operational efficiency overall. And lastly, it will unlock new and exciting platforms for long-term growth for both Megawide and PH1, attributed to a healthy project pipeline, better project visibility, and revenue stability. With that, I would like to turn the floor over to the PH1 team to tell you more about PH1 and its disruptive mindset. Ms. Gigi.
Hello, good afternoon. Gigi Alcantara, President of PH1 World Developers. In this segment, we would want to introduce PH1 World Developers and share our story, our vision, and some financial highlights and our portfolio of PH1 World Developers. So just a brief background, we are a real estate company that is poised to disrupt property development conventions through innovation and engineering technology. We will deliver extraordinary value to every homeowner through its extraordinary projects through Megawide Construction Corporation. Now, just for a brief overview of the company's history, it was year 2014 when the PH1 World Developers began operations as MySpace Properties. Year 2015, we successfully launched the Hive Residences, the first integrated condominium development community in Taytay, Rizal. The Hive Residences is the maiden project under MySpace brand. It consists of 4 buildings and a total of 970 residential units. Recognizing the need to create extraordinary living spaces, we rebranded ourselves as PH1 World Developers on year 2020 and aligning our vision to disrupt the norm. This is also the year when we launched our very first high-rise vertical development called My Enso Loft in Timog Avenue, Quezon City. My Enso is a 45-story residential development consisting of a total of 1,204 residential units. Year 2021, when we launched a 15-tower mid-rise project in Imus, Cavite, called One Lancaster Park, in partnership with Property Company of Friends, or Pro Friends. One Lancaster Park consists of 10,166 residential units. Year 2022, when we launched the staple of Hive, this time a mid-rise residential development in Taytay, Rizal, also featuring our unique Adloft technology, consisting of 1,041 residential units. And this year, 2023, is another milestone year as a new addition to PH1 World. We have Landscape, a subsidiary of PH1 World Developers, focusing on horizontal projects. In the course of the projects that we have undertaken, PH1 World Developers received recognition from prestigious award-giving bodies in the real estate industry, like Philippine Property Guru, when we received an award as highly commended Developer of the Year last year, 2021, and from BCI Asia Awards, where we won an award for being top 10 developer, and also Brand Asia Awards. Now, to introduce our esteemed board of directors who provide our strategic guidance and governance, Chairman of the Board, Mr. Edgar V. Saavedra, and the rest of the directors would be Mr. Louis Ferrer, Christopher Nadaya, Mr. Joel Valdez, and Arsenio Cabrera Jr., and yours truly as the president. And forming the management team of PH1 Developers are a mix of our seasoned and dedicated professionals who would oversee the day-to-day operations of PH1. Eric Gregory Tan, heading the horizontal team. Spike Ching, project director for vertical. Michelle Jacinto for finance and accounting. Eileen for sales, horizontal. Jasmine Ko for in-house sales, vertical. James for human resource group head. Charles Harry for design construction group head. So the thrust in the next 5 years of PH1 World Developers is to roll out projects in horizontal and vertical, focusing on the affordable segment. Now, the video pala. Okay, we will be showing videos of the projects for better appreciation. May we start with the PH1 World Developers, AVP. Thank you. We now delve into the project portfolio for the vertical segment. Spike Ching, please proceed.
Hi, good afternoon. I'm Spike. I'm handling project development for vertical projects of PH1 World. Let me introduce to you the completed and the ongoing projects of PH1 World. Let's start with our first project in Taytay. Mentioned by Ms. Gigi, the Hive support our development. It's on about a 2.3 hectare tract of land. The last tower completed this year, 2023. Total revenues for the project is about 3.15 billion. We just want to show you a map. The project is located along Ortigas Avenue Extension. It's right beside the Walter Market. So it's part of the development that PH1 delivered for the convenience also of the residents. Now we move on to the ongoing projects that we have, starting with our second development of the PH1 brand. Also, My Enso Lofts. It's located in Timog near the corner of Sergeant Isguera. It sits on about a 3,000 square meter plot of land. It's about 45 stories, as mentioned before by Ms. Gigi. Total revenue, we're looking at 9.4 billion for the entire project. We intend to turn over the project by 2026, between the third and fourth quarters of 2026. Okay, so as can be seen from the video presentation, we just wanted to highlight this is the first project with the AdLoft technology that was introduced by PH1 World. It's about a 4-foot high extra space that we are packaging to the clients. We call it extra space at no extra cost. This was also imported to the succeeding projects of PH1, particularly Modan later on, which we will discuss. We just also wanted to highlight the location of My Enso Lofts again. It's near commercial centers, very prominently located near Cubao and near also government institutions, being near the Quezon City Circle. So in terms of actual progress photos, we're currently finished with digging all the way down to the 6th basement levels. This photo was taken August 3. And also, we also wanted to share with you that we got a loan facility from BDO Unibank worth 3 billion development loan for the Mayenso Lofts project. So moving on to Modan Lofts in Ortigas Hills. Basically, this is the sequel to the Hive project, which is already completed this year. So Modan Lofts is also a project that features our AdLoft technology. It sits on about 1.6 hectares of land. It will bring in about 7.2 billion in revenues, slated for completion in 2026. So just to highlight again the location of Modan Lofts, Ortigas Hills, it's along Ortigas Avenue Extension. It will be located very near the upcoming MRT4. So it's also near a few shopping commercial centers. So for the convenience of the residents in the area. So we also wanted to share some progress photos. Currently, we're building the showroom, which we will open next month, September. So let's move on to One Lancaster Park. One Lancaster Park is a 10-hectare development. We're splitting it into 6 phases. The first phase of which will comprises 1.5 billion of the 60 billion projected revenues for the project. Because it's split into over 10 hectares and 6 phases, it will be completed by 2033. So it's located in Cavite, in Lancaster, New City. We held our showroom opening March 30 this year. Sales have been ongoing for the first 2 towers. It's about close to 80% sold for the first 2 towers. Here's a perspective of the development, the units. We also wanted to share with you some of our pipeline projects still in the planning stage. So we are looking to acquire properties in Quezon City and Pasig City. So very near, of course, the LRT line, LRT2 line in particular. So another property, another Modan project in Pasig, we are also keen on launching this. We're currently in the planning stages of another Modan project worth 10.8 billion, slated for completion 2028, going to sit on about a 2-hectare parcel of land. Here are just some perspectives of the community and the buildings. So again, this is under planning stage currently. I'd like to turn you over to Mr. Eric Gregor Tan for the horizontal projects.
Hi, good afternoon. So the newest segment under PH1 Rural Developers is the horizontal segment. So this segment will be focusing on house and lots in next wave cities. So our first project under this segment is Northscapes in San Jose del Monte, Bulacan. So this location is very strategic. This is the next city beside Metro Manila, and this is close to MRT 7 and the C6 infrastructure. So we can expect more developments to come into this city soon. Now this project, this is our maiden project, and this is it has an inventory of about 1.6 billion, and it sits on a 5-hectare property. And in terms of completion, it would be completed by next year, 2024. So this is just a walkthrough of the project. So Northscapes in San Jose del Monte, Bulacan, as the video shows, we really aim to do a first world type of development with extraordinary features. You saw that there were our utilities are underground, and the designs of the houses are modern, contemporary. So these are our house types. So we have the mid unit, end unit, and single attached. And our main disruption is our power efficiency. So this is not just focused on solar panels, but also includes our insulated walls and tinted windows to ensure that the coolness of the house will stay inside. So as mentioned, these are our Enviro Smart features, our solar save energy panels, Resi Shade tinted windows, and our Tropicool insulated walls. This is a snapshot or a photo of our amenities. And these are actual shots of our sales gallery. We broke ground last year, and we experienced good performance in terms of sales even before we got our license to sell. So when we do our grand launch by September, we expect to announce around 60% sold out for this project. These are actual photos of our development. So we have done a lot of groundworks, and we're expecting to continue with the drainage in the next couple of weeks. And we're about to complete our model units, which is set to be launched around October or November of this year. As mentioned, this is located in the next wave city. So you have MRT7, you have C6, and you have all the other developments in San Jose del Monte, Bulacan. Now, for our pipeline, we're about to launch a property down south. This one's in 13 Martires, Cavite, where the provincial capital of Cavite is located. So this one, aptly named because of its location, is Southscapes in 13 Martires, Cavite. So this would mirror the San Jose development project. And this is also 5 hectares. In terms of inventory, that's about 1.6 billion. And due to the nature of the business, this has a quick cycle. Our completion would be around 2026. In terms of accessibility, that's one of the key things that we look out when we select our property. So 13 is accessible via Governor's Drive. To the left, you can access it via Cavitex, and to the right, you can access through SLEX also. Now, since we have huge plans for this segment, we have a couple of properties that are under negotiation. And these are spread out throughout Luzon, specifically targeting the next wave cities, no? Bulacan, Cavite, and Batangas. Turn you over to Ms. Michelle Zobal to explain the financial highlights.
For the financial highlights, as mentioned by Spike and Greg, we have consolidated projects on the list. So this is categorized based on the status of each of the projects. So we have completed, ongoing, and projects under pipeline. So you would notice there are already several residential units for each of the projects, with a total of 14,783 residential units for the various projects. So this project has already proven sales take up, considering the completed project is already at 98% sold, and for the ongoing projects, we have already 54 to 69% sales take up. So the projected revenue consolidated that this project would give in is about 94.8 billion, 94.6 billion in revenue. So this would be the last slide for stage 1.
So thank you very much. There you have it, the newest member of the Megawide family. We'll open the floor to Q&A, and for proper acknowledgement, kindly indicate your name and your affiliation. We have received advanced questions from Klein of Parigi. So let me start by asking anyone from the finance team to answer. Number one, can you provide color on the strong recovery of the construction units revenues in the second quarter of 2023 versus the first quarter? Which projects drove the improvement?
Can you repeat the question, Ron?
Can you provide color on the strong recovery of the construction unit in the second quarter of the year? Just remember, we did 6.7 from an average of around 4 billion.
Yeah. So basically, this is a sign of like going back to the normal. We're back to normal. Most of the projects are already in full swing, and then even in the operations, particularly also we have one of the biggest project we have is the casino. We're already in full swing because the client is really rushing us to open the casino as early as possible. They're looking at next year. So we practically completed all the structures. We just did the top off, and then hopefully by next year we will complete the electromechanical works and the finishing.
So specifically, which projects drove the improvement?
Yeah, that's practically the biggest contributor is
Sun City.
that's the biggest item.
There's some significant improvements also for the MCRP or the Malolos.
Oh, yeah.
Project.
In terms of the infrastructure side.
And also, we got some approval for the change order. So this also contributed to the increase in our quarter two revenues.
Thank you, Boss Ed, and thank you, Ms. Mia. The second question is, why did receivables jump 24% Q-on-Q and 26% year-on-year in 2Q 2023? Are you still having difficulty collecting from your clients? When do you expect receivables to go down? And do you expect another large write-down of receivables by year-end? So these are all related to receivables. Ms. Mia, would you like to take the first point?
We would note that our Q2 revenue significantly increased from first quarter, about 57% actually increase. And in terms of quarter-on-quarter revenues, this has been the highest recorded revenue for the company. Hence, with this receivable, we're expecting also that receivable will increase because of the turnaround of collection period. Some of our projects also are in milestone arrangement, meaning we have to complete certain phases first before we're able to collect. And as mentioned earlier, one of the contributories is the MCRP project, which has about 60 days credit period. So we're expecting that receivables will stay on the normal levels because this is the normal revenue normal operations of construction segment, as mentioned by our chairman here, that we're back to normal already in terms of our construction operations. Hence, we see that this would be the levelized normal receivables for the next few quarters. We don't see any problems in terms of collections with our clients since we maintain good relationship with them. And lastly, we don't see any write-offs for this year. Most of our projects already are actually ongoing and live projects, and we've already weed out whatever is the rotten eggs from the previous years, from the write-offs and impairments that we have recognized in the previous year.
Yeah, to add what Ms. Mia have mentioned, actually, I think based on that report, there is one or two projects that we were expecting for the receivables, but this August we were able to collect half of that, the biggest receivables. So you can see the improvements of these clients that are the clients that we have now. Because if the strategy of the company really to maintain lesser project but bigger ones, which is what's happening now. So to have a better focus on bandwidth and also have more selected clients, good paying clients.
It all boils down to the quality of the clients that we are having right now. Yeah. Just to put it in context, our revenues for the first half of the year for our construction was 10.9 billion, and our receivables grew by 4 billion, and 1.7 of that was from MCRP. So technically, our receivables grew only by 2.2 billion. So it's part of normal business.
Thank you for that very extensive explanation from the finance team and our chairman. The next question is for PITX. What is the office occupancy rate of the land port in 2Q23 and 1Q23? Mohit, would you like to take the question?
Hi, thanks, Rolly. Good afternoon, everyone. The office occupancy for the land port in Q2 is 60%. This was 47% in Q1.
Okay. The next question is, can you share the average rent per square meter today for office and retail tenants at PITX? And do you anticipate rents to decline further?
Okay. Well, for the office, in line with the oversupply in the market, the rentals had soften. So we're ranging from 500 per square to 800 per square and averaging somewhere around 650. For the commercial business, the average rent per square meter is 1900 per square already. So that's significantly improved. On the last part, in terms of the rental decline, I think we're well past the bottom, and it's only going to get better as we go along, especially for commercial. We're already at highest ever levels in terms of our overall yields and revenues. For the office tower, yes, definitely also past the bottom. The new deals that are coming in are coming in at a higher rate for PITX.
Yeah, I'd like to add to what Mohit have just said. I guess in terms of commercial, due to the high traffic that we have, so if you compare us to other like community mall or the traffic that we have is 100,000 per day. So I think the commercial we have a good leasing rate because of the high traffic, and we expect it to even improve further. The only challenge here is really the office. But however, in the office we practically have replaced a lot of our tenants from from heavy POGO tenants. Now it has gone down to like maybe half or less than half. I don't know if you can confirm. Less than half. So which means most of our tenants now are the traditional offices and a little bit BPO. But
Right.
because of these all casino expansions going on in that area, we also able to tap some of these casino operators who expands their back of the office.
Backroom operation.
Backroom, yeah. So hopefully if we expect this to fully fill up maybe hopefully by year end. So then we're like, at least we're more or less good already. Now, in terms of the rate at 600 pesos, we're already good at 600 because when we built the PITX 4 or 5 years ago, construction cost was way cheaper, 35 to 40% cheaper. So I guess in terms of the return, no, we're fine with the rates.
Okay. Thank you, Sir Mon and Boss Ed. There's another question related, I think, to the PH1 acquisition. What is the basis for the 5 billion valuation for PH1? Is it based on an NAV earnings multiple? So let me take first crack. It used a DCF to arrive at the sum of the parts value for a PH1. In fact, there's a disclosure in the PSE dated July 5. It's a fairness opinion issued by the third party consultant. I think you can go through it to get more details on the valuation of PH1.
I'd like to add also what Rolly had said. No? I think I got a lot of questions from text messages, from phone calls, asking, and from the analysts asking me about how did this valuation arrive. And then their common impression is that they find the value so high. But I was telling them, okay, I guess we have to be mindful also, what is the basis of the valuation? It cannot be always like, the basis of the valuation cannot always be multiples, right? Multiple earnings. So we have to see what is the best valuation, whether it's a DCF, whether it's a net asset value valuation, or is a multiple earnings. So obviously, my explanation is simple. If you look at PH1 now, most of their pipeline projects are still ongoing constructions. So based on the accounting procedure where you cannot book or you cannot recognize the revenue. So it's just an accounting standards. So, but if you look at the cash flow that it will be generating by 2024, 25 onwards, and then you discount it at the fair rate, no? And then basically we did a DCF. So we think that's the fair valuation. And then not counting all those upside that PH1 are already have in the pipeline that's about to close, where we did not count in the valuation. So which means in the next 2-3 years, we see that our development business, which is the PH1, will be far bigger than construction. So you can see a big upside. So definitely, what I can assure to the investors that this investment that we have made for PH1 will definitely be the meaning we made the right, we will be making the right decision. This will be paid off, no? So that's it. I think the proof of the pudding, I think, is like what we did in the airport, right? When we did the sale, no? So we're very careful in doing the valuation and picking the right business.
Thank you for that, Boss Ed. Related to property, there's a question from Ralph Fausto for Video Securities. Can you share any annual targets for PH1, like capex, reservation sales, project launches, etc.?
Yeah, maybe you can share to them your revenue, your sales target this year and next year, and then what is the growth?
Yeah. For this year, our consolidated target is at 6 billion, coming from 2 billion the previous year. This year is 6 billion consolidated target for vertical. That's only for vertical.
And 2 billion.
And an additional 2 billion for horizontal, which is just starting. They have just been recently launched this year, landscapes. So we're looking at about 8 billion in total target for this year.
Yeah. So I guess for 8 billion this year, and you project like 15-20% growth year on year on the sales, no? And then with the gestation period of, like for the horizontal development, we're looking at 1 to 2 years.
18 months.
Maybe 18 months. And then for the vertical, we're looking at 24 to 36 months gestation period. So normally the revenue recognition follows after that period. 18 months for horizontal development, and for vertical development, normally around 24 months.
So you can already have optics as to how much revenues our PH1 will have in the next 2-3 years.
Yes.
Because of this booking and sales take up. And it's not also just a dream, because there are already reservations that we have already sold. Like for example, our Northscape, it's how much is 60% already sold. 60% is already sold. And so is what, 40?
No,
60%.
Yeah.
The Enso project is already 60%
And
sold.
Bodan Loft is 60%.
Also
of the sale.
60, yeah, 61%. Oh, 67. Modan Loft is 67%.
it's our way.
So it's not a pipe dream. There is already something going on. Yeah, we have clients already wanting to are already signed up for these projects.
Thank you very much, Sir Ma'am, for those very encouraging numbers. And
And let them just wait for a couple of years. Then the revenues would come in.
Yes.
You know, we can really book the revenues.
Yes.
how about in terms of capex? How much are you looking at for next year?
Typically for like based on the sales, just to give you an estimate for every sales that, let's say 8 billion, normally the capex will, or a little like half of that will be capex. So you expect like 40% from the sold units is roughly around will be the capex.
Thank you for that.
Normally it follows like the year after, 1 year to 2 years. But if you look at the year to year, when you average it out, it will be like 1 to 2 years behind.
Yeah. It's a lag capex. For the project launches, Ralph will just send it to you. I think it's one of the slides presented a while ago. And there's another question from Herman de la Paz of Abacus, construction related. Can we expect to maintain construction revenues in Q2 moving forward, i.e. the 6.7 billion 2Q?
Yes, because so far the order book that we have now in construction is still more than our target. So So far, I don't see any delays, that unless we will have another pandemic again.
God forbid.
Yeah.
Thank you for that. There's another one sent anonymously. Thank you for the briefing and the project presentation of PH1 World. And I like the ad-lock technology in your projects. Will this be applied to all your projects or just selectively? And how does the additional space impact your margins? Ms. G?
Thank you.
Yes, thank you for recognizing the importance of our technology and the innovation. We would really like to integrate as much as possible innovation technology in all of our projects. Now, the impact in terms of what's the question again? Sorry.
Adlock. The adlock. What will be?
Adlock.
Impact on margins of the ad-lock technology.
On the margin.
There are two. Number one, will it be applied to all the projects or only selectively?
Well, the adlock technology for now will be applicable to our vertical project.
Okay.
Yes, but for horizontal, there is another play now. We will still be integrating different innovation like the energy efficient, but the adlock will be applicable to vertical for now.
Yeah, but I'd like to add to also what Gigi had said. So Megawide, we've been building projects for developers for the last 26 years. And we have done affordable, the lowest, cheapest buildings, and we have done also the most expensive. From as high as Shangri-La type of projects, Rockwell, we also have done 8990 type of projects. So basically, Megawide and even SMDC projects. So if you look at the core strength of Megawide, Megawide has been an engineering and also a construction company. So we practically have designed a lot of projects, or helped design the architectural, structural, and the MEPF side, and sometimes the architectural part. So the adlock technology that we have done, I think that is the reason why we went into development, is because we see the strength that we have. So technically, to answer your question, it will not impact on the GPM because we are able to design the product in such a way we give 50% extra space, and then we don't charge it to the buyers. We don't sell it in the additional per square meters. So this is because of our ability to design it, to engineer it efficiently. So that's why, I mean, modesty aside, I always encourage our management team is that to push for more projects, because we believe in our product and we have tested it. So the strategy is to just put up a project where there is already a competition. Because if your product is superior, and then if you sell it cheaper, and then you have a better quality, more space, and then cheaper price, and then better quality, and then we have a good reputation, we have the right brand, that reputation where we deliver good product and with good quality. So, I mean, that's why we have plenty of projects right now on the pipeline, and then so far our management is doing very well in terms of selling it. Of course, it has to be with the good product and capability to deliver on time.
Yeah, thank you, Boss Ed. So basically, there's no impact on margins. This is related to CapEx. Both your vertical and horizontal developments have very aggressive growth ambitions. How do you expect to fund your CapEx?
Okay.
This is, as you may have noted, our My Enso Loft, we got a developmental loan from BDO. So all the projects in PH1 will have the same template, wherein each project will have its own developmental loan. The same goes with our horizontal project. It also, our North Cape, for example, we already arranged for a developmental loan for that specific project. So as we go along, that's how it will be managed. And if you also note, if you want to draw a cash flow projection on this one, our horizontal project is the gestation period is what, 18 months? So the cash flow there are very quick. So those things and the sales trajectory is quite fast right now. So we foresee that it will just fund for itself and basically also help fund the other pipeline projects. So I guess the most difficult part in any startup company like PH1 is really just to start up. And here we have Megawide now using Megawide's balance sheet and financial capability. I think PH1 is geared towards the expansion that it wants to achieve. So medyo it's there already. The funding requirements will be done on a per project basis.
And just a follow through to that, Rolly. This is Joel Valdez, shareholder and director of PH1. The capital formation of CAPEX is really a combination of internal generated money, leveraging, and actual equity. For going forward for the medium-term roadmap, we also see ourselves tapping the equity market if and when we already realize the projected cash flows as forecasted in the earlier slides. So you can craft a financial plan over a 5-year period, combining all these sources.
Thank you, Joel and the rest of the team. There's a question on the land port. Any updates on your expansion areas, the TCD? Wait. You're on mute.
Hi, Rolly. Well, on the expansion areas, I'm afraid Attorney Jim is not here, right? I'm not. Would you want me to say something on that, or maybe for later?
No, maybe I can. I can take
Yeah,
that
maybe
question.
Boss Ed can. Yeah.
Yeah.
Okay. Thanks.
Okay. Well, I think for TCD, we'll just better we'll just keep it confidential first for this.
There are plans.
There are plans because we
it's still premature to say.
Premature to disclose, and then there's quite sensitive information that we have to keep it to ourselves first.
In time, it will be announced. I think there's a better way to say.
Yeah.
In its right time, it will be announced.
Yeah. And there's a last question for PH1. How much land bank do you have?
Okay. The total land bank that we have now is around 200 something hectares, based on what we have signed only that in JV. So every year we expect it to grow. So this is a combination of horizontal development and vertical development.
Okay, so
by the way, I'd like to add also, Rolly, I also received these questions also now about CAPEX, and then I also get these questions that they always ask, how do we fund our land acquisition?
Yeah, I think that's more important.
So basically, the strategy of the company, of the group is really right now is to focus on the more JV rather than the pure sale transaction. This is for the reason of we try to limit the capital, because we know that land acquisition is really capital intensive. It will eat up a lot of your cash. So we are doing almost all or mostly are just JV. We take a little bit haircut in our margin to give more upside to the landowners, but in exchange we try to minimize to lessen the cash exposure or cash requirement.
Well, it also adds to the faster asset to cash conversion, because the JV partner would expect a more robust timeline in execution. Unlike if you land bank, you have to sit on it and you spend cost of capital.
Yeah, thank you, Joel and Boss Ed. So I guess there's no more in the list of questions. If there are no more questions from the floor, we'd like to thank you on behalf of the management team of Megawide and PH1 Thank you very much for attending the briefing, and we hope to see you in our next briefing. Please enjoy the rest of the day and have a good afternoon. Thank you.
Thank you.
Thank you very much.
Thank you.